talking about Goldman Sachs and your ability to leverage strategic partnerships to bring products to consumers and small businesses. But let's start with an introduction about your background and your role at Goldman Sachs to put everything in context.
No, absolutely. So I've been in Goldman Sachs since the very beginning, launch of Marcus in 2016, and in the last 5 years, I've worked across different roles in general management, product development, risk management, and also led some of the important strategic partnerships with players such as Amazon, Walmart, and Apple.
Wow! And where did you come in from? I know you were at Discover, right?
Yes, I was at Discover running their risk functions for almost 7 years before I was brought on as part of the founding team for Marcus when consumer business in Goldman Sachs didn't exist. And the first 4 or 5 employees who were tasked with the idea of starting the first consumer product and then grew it into a platform where I'm meeting the spending, savings, borrowing, and investing needs of our customers.
What was it like hearing or getting that opportunity, like to say, here's this, 100-plus-year-old institution that's really undergoing the most transformation of any major institution out there? Like, what did it feel like to even hear that type of opportunity? What was your reaction?
No, that's a great question. If I go back on my memory lane, I remember when the call came through, and when we first, when Goldman Sachs calls, you typically pick up the phone and answer. And I did that more out of curiosity to understand what is going on. It's very interesting and how such an old institution with a really great reputation in risk management, data and engineering capabilities was thinking of disrupting the business of consumer finance. And I have to say that, and I joined the last part, saw Rena on the call, big fan of him. Firms such as Lending Club and Prosper and a few others had already shown the path that digital technology was the path to disruption. And what was most interesting for us is how do we start a business, educate the firm and bring them along the way because it's completely new for them. Use the strengths that the firm has, both in terms of balance sheet and risk management and digital technology, and bring in the customer centricity to the table. One great thing about Goldman Sachs, which many of you may know, is the firm has always put client centricity. They use the word client, not customer, as one of the top business principles. And when you come to Goldman Sachs, you will see that doing the right thing by the client is the number one thing that we live by. Just shifting it to mass affluent customers, millions of them was the thing that we brought along. But getting the ethos aligned together towards customer centricity was never a challenge.
Amazing. I'm just picturing those early days about the emotions that were there of like that huge opportunity. So let's talk about the way Marcus is using partnerships to bring products, because I know you have a DTC business, direct to consumer,
Sure.
But I know there's partnerships plays a big role as well. Can you talk about that?
Absolutely. So we have evolved over time for sure as you learn through the business. We started as a direct to consumer, primarily a personal loan business. Over time, bought a deposit platform from GE and grew that rapidly. Then launched Apple Card, launched point of sale financing and small business lending. Soon we are going to launch a checking business. And as we were going through all of these different enhancements of our platform, we realized that our strategy essentially for success lies into two-pronged approach. One is we continue to be a direct-to-consumer business, while we also look for like-minded digital native partners who will be willing to distribute our products on their platform. Our vision, as we have stated, is we want to be the digital banking platform of the future, where we meet the borrowing, saving, spending, and investing needs of our customers and help them take control of their financial lives. We want to do it directly ourselves, but we also want to work with like-minded partners who can help distribute those products and make the same change in the financial lives of the customers that come through their platform. One thing we care most about, and you will notice that as you look at the list of people we are partnered with, is the focus on customer and creating value for the customer, making sure that the products are simple and transparent and personalized remains really important to us. And it's actually super important to our partners as well. So in most cases, in all cases, it's a really good marriage.
So I know Marcus by Goldman Sachs has partnerships with Amazon, Walmart, and recently with C2FO. Can you talk about those partnerships and I guess the value proposition that you're describing to the client at the end of the day?
Yeah, so I think there are three things that becomes very important for us as we start talking about our value proposition, specifically in this bucket. So, and it's important to say for these three partnerships, the partnership is more is on the small business side, primarily e-commerce sellers, which in the last 18 months, a lot of commerce has shifted towards digital, and it's a very interesting customer base to work with. In fact, it's a very underserved customer base to work with because traditional banks don't use the more modern writing techniques to provide credit and financing to this particular group of customers. The way we have thought about our partnership essentially is three important areas or three pillars. One is the financial product itself that we distribute through this platform have to be simple and they bear very low cost to the customer. In today's market, there are many products for small businesses, but most of them are revenue backed, fee based, and they just make them too heavily priced for the small businesses to actually take benefit of those products. The second thing that we're focused on is we're using both platform data, so data we have about revenues and sales from the platform from Amazon, Walmart, or C2FO, as well as the capabilities we have built around holistic underwriting of a seller's revenue. So, for example, I may be doing only 30% of my business at Amazon, another 25% maybe at some other platform, and maybe I have the remaining 50% directly managed through my retail store. We have brought all the data together so we can do more holistic underwriting. So you're not just underwriting the business for a small sliver of the revenue, but the entire business. And then again, do that in a very digital way, building a headless architecture behind the scenes so that we can plug into the ecosystem of these platforms to the level of depth they want to. They could be as simple, but a handover to our platform through a link. But in most cases, we have deeply embedded our experience within those platforms, and do that effectively. We made sure that we build a headless architecture with the right microservices so that we can enable that. And that allows us to bring partners online very quickly. And then it also allows us to iterate and test and learn to make sure that the experience and the product features meet the needs of the customers on those platforms.
Got it. So I want to hone in on SMB lending specifically, and talk about why digital engagement is so essential for that type of business.
Look, if you think about it, one of the things that a small business owner doesn't have is time. Of course, they need the financing and they need more employees these days. There's a shortage of employees across the board, but they don't have time. And so it's very important to think about what are the different ways that we can actually help them save time and give them more certainty of outcome. The other thing that we are seeing, and I'm sure you have seen it as well, is in a small business life cycle, invoicing, payments, order fulfillment, borrowing, financing, they're all now converging. And more and more tools that these small businesses are using are actually digital tools. And there are so many different firms that have done so well, all the way from Shopify to Squares of the world to Intuit of the world, to provide digital tools that essentially make a small business's life easy. And so there's several proof points that we have been seeing and noticing, especially in the last 18 months, that show that the tilt to digital engagement for a small business is just going to increase. I'll give you some examples that I was reading recently. And of course, in small business world, the Paycheck Protection Program, the PPP program, was very rampant in the last 18 months. And I was reading some data from there. 44% of small businesses applied for the program online with online lenders in 2021. That is up over 10 percentage points from the year before. And another survey I was looking at is 52% of small businesses are now indicating, and it's across all categories, that they prefer at least starting their journey on the digital channel, getting a more certain offer through a digital channel than working to the classical ISO or broker model, or even going to a retail bank. So those things are showing that the trends towards the small business engagement in digital is increasing. And last but not the least, a lot of the traditional lenders have actually acquired digital lending capabilities. Two great examples would be, in my mind at least, Amex bought Cabbage last year, and then Innova bought OnDeck. And from what I understand, outside in, primarily for their digital capabilities.
Interesting. And as you're saying that, Abhinav, I'm again impressed about like when Goldman Sachs went through this digital transformation. It's not like you went to one, like each little piece of your business, SMB lending, banking, checking, wherever you went, And then the whole sort of transaction banking piece. Like you guys took
Yep.
off the whole world all at once, which was like, how did you determine like what to prioritize? Like you really just, to me, it's like this was. I could see a big bank undergoing like one of these things, but to do all of them is just it's kind of mind blowing to me, actually.
No, I think that's a great point. And look, I'll be very clear that prioritization, just like in any other firm, is always a challenge. I wish I had infinite resources. I can do whatever else I wanted to do. But to answer your question more succinctly, one of the key things that we have aligned internally at is whatever we're going to build, we'll try our level best to build it in a platform way. And the idea being, as you are building new capabilities, that I'll give you one example. Let's say income verification for self-employed. You can use that for your personal loan business. You can use it for your small business as well. On the more smaller side of the small business, we actually call them consumer plus plus, because that's the other interesting thing changing in the world, where there are a lot of folks who are self-proprietors who have multiple jobs, and freelancers, gig economy folks that are kind of small businesses but behave more like a consumer. We call them consumer plus plus. But as we are building such capabilities, we're trying to build it as a platform and as a microservice, so that we could try and experiment with multiple different products. We are not saying that we'll be the best product in every category. We are not saying that every product we launch will be super successful, but we will have a product to meet the needs of the customer, because over time, we want to become the primary banking relationship for the customer.
And is that the goal, to become the primary bank, or do you see yourself sitting in side by side along other financial services providers?
Look, the goal is to strive towards being a primary bank of the customer, especially for those customers that are really looking for digitally interacting with their banks. And there's a whole secular trend towards that. And the way we feel we could do it is by meeting their borrowing, saving, spending, and investing needs, and being where they are, and they are at their mobile phone most of the time.
Yeah, totally. Can you talk about the work Marcus by Goldman Sachs is doing in working capital for SMBs? And I guess why having access to working capital is so important right now.
No, absolutely. Look, access to working capital is definitely crucial to the growth of any small or medium-sized business, especially now. In the last, I would say, 18, 20 months, which has seen some unprecedented change in the dynamics and the structure of how supply chain works, how sales processes work, and the cash conversion cycle has become more unpredictable. In certain cases, for example, in e-commerce, in certain products in e-commerce, it has actually accelerated. It's accelerated so much that we hear from a lot of small businesses over there that right now they don't need any credit, because they are selling things faster than things are getting on inventory being coming up on that. But right now, if you think about it, last 3-4 months, all you hear in news articles is supply chain crisis. Everything being manufactured so slowly. There's so many ships outside LA and Orange County waiting to be undocked, and the material and goods being shipped to different places and shipped to consumers' homes. That creates a cash conversion cycle where actually having a product that is not super expensive, that helps you manage your working capital more efficiently, is something that our customers tell us that they really need. If you see about some of the surveys we have done, and these are all Fed-based surveys, 67% of small businesses report challenge meeting their operating expenses due to cash conversion mismatch. And there are lot of different ways to do that. There are merchant cash advance that are more popular. We feel that's a product that works for certain customers, but it could end up being very expensive, especially if the cash conversion cycle is very unpredictable. We prefer a line of credit with low rates and no fees, where a customer can draw when they need and manage their cash conversion cycle predictability by themselves.
One of the things I've heard from you also, Abhinav, in our discussion right now is sort of how the world is very different now. Obviously, COVID impacted that, and there are some secular changes that I think will stick with us. Can you talk about how it's impacted, COVID particularly has impacted small business lending, and maybe how you're thinking about it moving forward?
No, absolutely. Look, I'll almost put the COVID changes almost like 3 phases. Phase 1 was, I would call it Feb, March, April, when the whole world was falling apart.
Yeah.
And it impacted small business lending quite a bit. Many of the digital lenders specifically had a really tough time collecting on their past dues because the small businesses certainly could not sell anything. I mean, the situation we all went into, being shelter at place, especially brick and mortar small businesses were suffering massively because there was no sales. And the lending completely froze. Everybody tightened their underwriting policy. Phase two is when I would say when the federal agency stepped in with the PPP program, which I thought was a very smart move, really great way of making sure that the capital that the federal government is putting in play actually reaches the pockets of the small businesses. I think that has been a very successful and tremendous program. And we saw a lot of small business lenders actually pivoting and becoming PPP lenders. And there also the digital technology they had helped them quite a bit. One can say that for the past 18 months, the biggest small business lender in the market has been the federal agencies for the PPP program. And we have seen that even for large money center banks, the demand for term loans and LOCs has been kind of flattish. The other thing that COVID did, which is now more than, say, the phase three, the more recent time, it did bifurcate a little bit of the businesses that are doing well, like e-commerce, and the businesses that are still trying to come up out of COVID. Hospitality comes to mind, even though tourism and hospitality is picking up, at least in most part of this country. But we're looking at the surveys, we watch it every month. Still, business 78% up to 80% of businesses still report reduced revenue from pre-COVID time. So there's still some catch up to be done. I think that's the situation of the consumer themselves, the end consumer. What I think that will happen going forward, and what COVID has changed, is the adoption of digital tools, not just for the lending and financing part of the life of a small business, but across the board, all the way from selling their goods and services online, taking orders through more robust digital tool, invoicing, payments, money management, managing their books. Everything has shifted more towards digital tools. And what I think will happen going forward is that trend is here to stay. More and more small businesses, whether they are brick and mortar or completely online, will be using digital tools for managing their business life cycle, financing being one of them. And some of the companies that have done very well in the last 18 months will continue to do very well.
Totally. One of the things you said, Abhinav, is you mentioned data engineering previously, and we have a question from the audience, from Ravi. What aspects of data engineering are important for you at Marcus?
That's a great question. So the way we have always talked about is design, data, and digital technology is really key for success, at least for the business we are in. And data becomes almost like the currency that everybody has a lot of it, but don't know how to harness and leverage. Even for the smallest launches we have done, smallest partnership we have done, we had made sure that the interaction and signals that we are collecting from the customer in the form of data flows back to our analytical warehouses, where we can then look at the trends, understand how the customer is interacting with our platform, understand what kind of products they're taking, and how they are actually interacting with those financial products themselves. That allows us to make quick changes in our underwriting policy, quick changes in our onboarding customer journey, quick changes and rapid alterations of our servicing, to ensure that we continue to evolve and iterate. That is only possible if you're A, collecting data, B, ensuring that it's all tying up to provide a 360 view of the customer that is actually interacting with you, and 3, it is available at the point of decisioning. I've seen in my past life, and this is where Goldman Sachs clean sheet of paper helps, where we collect data, we dump it in a data lake, and there is no way to make that data available at the decisioning points. If you do all 3 of them together, there's a lot more value you can exert out of any business that you're running, specifically in a lending or a banking business.
Right. Thank you. I appreciate you answering that question. One question I have, and any fast-growing company has to deal with this, is just talent, right? I know there's been some turnover. You guys have been at this 5 years. Like, it makes sense that there's fresh blood that comes in all the time. Like, what's your approach to recruiting top talent and to infect them, I guess, with the belief that what you're doing is excites them?
No, absolutely. Look, I'll start by saying that the acquiring and retaining talent is very important to a success of a firm. And I also say that it's very difficult right now. I'm sure everybody that you are talking to, Zach, is telling you similar stories. I sometimes wonder when I talk to my friends and colleagues in different industry, even marquee firms that are doing very well from a valuation perspective, talk about some of the talent drain they are seeing. And I wonder, where are people actually going? There's a whole concept called the great resignation, as I hear it, going on right now. Uh, and look, the way we have thought about it is, number one, be very clear on the long-term vision we have. We have been very clear and very outspoken about it, more so in the last year and a half than maybe the early part of our journey, because it just took us some time to come up with our more clarity on our vision. So be very clear on the long-term vision of what your company is there to do, and be very also clear on the fact that it's not going to happen in 6 months. It's a long journey. It takes time to build large scalable businesses that are actually able to fulfill their vision. The second thing is to be very, very clear on what takes precedence. One of the things that we have said very clearly is customer centricity is something that we will not sacrifice, even if it costs us more, or it takes more time to build something, or it just is more work. We should not run away from work. And you'll find that talent pool and employees across different skills, different age group, different background, they gravitate very quickly towards long-term vision and customer centricity. If you could make sure that you have the right hiring process, the right onboarding process, and the right initial talent development process where you can imbibe these two things into your employees, they would stick around for at least longer than usual. That said, there's a whole talent war going on for product engineering, data science, and marketing folks. And we all continue to work through that and ensure that we are getting the best talent and we are compensating them appropriately as well.
Amazing. We're getting near the end of our conversation with Abhinav. If you have questions in the audience for him, please submit that through the QA button. I have a question about, I guess, looking ahead. What plans do you have, particularly in SMB lending, as you expand the offering over the next few years?
Yeah, so there are 2 or 3 things we are looking into. One is we have done well with one of the products we have created, which is a line of credit that goes up to $1 million, fairly low rates for primarily small businesses on e-commerce platforms. We are now also doing surveys, doing customer research, and understanding what other products they would be interested in. Term loans is an easy product that is just another version of line of credit, which some of the folks for growth investing investing is something they're interested in. So we'll build that. We're also looking at are there more short-term products that they will be interested in, and we'll be building that. The platform allows us to take our product and services to create different sorts of financing products for our customers. We'll definitely do that. So that's on the product side. The other thing, we're also looking at distribution. How can we think about distribution beyond the partners we have? Are there ways and means to distribute through partners in other type of categories beyond e-commerce? We're looking into that. And third thing that we're investing heavily in is further accelerating and improving our underwriting capability. In this business, you need to manage credit well. In this business, also, you need to understand that different businesses have different credit characteristics, and data you get from Commercial Bureau or SBFE or other places may not just be sufficient to really give you a sense of how good or even how bad that business is. So we are investing heavily in alternate sources of data that can help us underwrite a small business better. And last bit I'll say is, as I mentioned early on, is we're also realizing that there's a new market evolving, which we call consumer plus plus, which are not like full-time employed or part-time employed consumers looking for personal loan or credit card. They're not either small businesses with a physical presence looking for large lines or MCA products or other things. These are essentially folks who are doing multiple gigs, who are more in as self-employed and are looking for products that help them accelerate their business and do it at their own way. The consumer banks or the small business community banks don't serve that customer, and that's another interesting area to look into.
I really like that terminology too, consumer plus plus. What a great conversation, I've really appreciated it. Thank you for joining us at the Big Bang Theory conference.
Thank you so much, Zach. Thanks for having me.